charge for this deal at say LIBOR plus 4%, LIBOR plus 5%. People just talk about the coupon rate, the interest part of the game. They tend to forget, or sometimes they don't even understand that what all the hidden costs which are involved. Normally, all these bank charges you a sort of an upfront money. Okay, and what is of more importance for one is to know a sort of a all-in cost and how that all-in cost is computed rather than just going in for the coupon. Coupon is something which is a recurring thing. You can go in for, no doubt nowadays it is not encouraged, fixed versus floating, etc. But apart from this, when you go in for a financing arrangement, you have what I said as a upfront money. You have got certain agency fees, you have got certain security trustee fee. Security trustee is because there will be an agency which will be just taking care of the securities which you have handed over to the financer, like in the form of your asset being mortgaged, in the form of other earning assignment or insurance assignment, etc. And to manage the show, the other person can charge you anywhere between $10,000 to upward of even $50,000, depending again on your negotiation powers. So what I'm really trying to mean here is the critical consideration when you negotiate a sort of a term sheet or when you negotiate the terms of the financing arrangement, you have to be cautious enough of the fact that it is not only the interest rate which is a sort of a recurring one. There are aspects like upfront fee, security trustee fee, agency fee, penal charges, or something which you are not being able to do, what kind of a sort of a financial obligation it can attract. That has to be very well understood. Then the third point is with respect to the time period of tenure. If you ask me, with my experience, we especially we have got this mindset of going ahead and thinking that the earlier I can squash a loan out, better it is. I can tell you, at least for the shipping industry, that should never be the approach. The approach is, at the beginning, you go and take a loan for a maximum period what you can. Yes, we have got our fundamental psychological issues. Okay, fair enough, if I can close a loan at the earliest option, nothing like it. Okay, that option you can have as a parallel thing. But as given the kind of the experience one has or the vagaries one has seen in the shipping market, right, or for that matter any of the maritime in the maritime industry, the kind of vagaries one has gone through, it is always advisable as a general rule to go in for the maximum tenure. Even for that matter, let me tell you, like RBI suggests for shipping industry, especially for industries which are with high capital intensive nature, or for that matter, even in the ECB rules, external commercial borrowing rules and regulations, that there is what you call as an average maturity clause, which says, it's very simple, it says that if your loan size is going to be on the higher side, better go in for a longish average maturity. In the sense that if it is going to be within, say, acceptable limit of 10 to 20 million, your average maturity has to be at least for 3 years. And if it is going to go beyond that levels, you have to go in for an average maturity of 5 years. That means they don't want, the RBI may also have certain other compelling reasons. It may also come out or emanate from that overall forex positions, etc. But the more important point which also RBI looks into the fact is how capital intensive is shipping and how the industry has to be protected and how sporadic decisions should not be taken wherein exposing oneself to a shorter tenure. So my suggestion would always be go in for a longish tenure when you are going for any capital intensive sort of an acquisition, especially in the shipping and the offshore sector on which we are talking to. Then the financial model or projection. Again, the tenure and this are in a way interlinked. When you do a financial model or projection for an acquisition, which requires a financing arrangement, be conservative. Don't go and put across the numbers in such a way that you feel that, okay, if I'm going to put a sort of an aggressive number, probably I'm going to get a sort of a very good deal or something to that effect, and accordingly I can minimize the cost or something. It's not going to happen, because ultimately what happens, all these financiers, especially the international shipping finance lenders, okay, they what they go is they go by the financial model or the projection which you have given them in the first instance, and that becomes the base for them. So many factors in the same slide when I am talking about the adjacent column, we have got covenants, etc. All these factors or parameters are decided by the financial model. So my sincere suggestion would be not to go in a very aggressive, maintain. So it's not that you have to be extra conservative. It has to be something realistic. So aggression is not what is called for here. Then the other important factor is with respect to the valuation of asset. Valuation is something very critical, key or critical consideration is, because one should know when you are entering into a sort of a deal of this magnitude, what to commit. Because there will always be a condition that at any given point of time, the loan or the financing facility which has been extended by the lender and the asset value, there has to be a sort of a percentage cover, right? And the lower you can have it, in the sense that normally nobody will allow you to go below 100. Say if a person has extended you a loan of 100 rupee or $100 million, the asset value should at any given point of time should be definitely above 100. But as a negotiation point, according to me, it has to be kept at the bare minimum level. People otherwise what they do is, as a bank, they will always put say 1.7 cover or 1.8 cover, which realistically is something which is very difficult, especially given the kind of time frame for which the arrangement is going to be. Because somewhere in the scheme of things you will have a hit. But normally what happens is people ignore that. Okay, it's something, a condition, we will see. It's nothing, because on day one you are quite comfortable. It is not going to come and hit you, let us see. So that's precisely what I said in the beginning of the conversation. It is not any sort of a credit card application or a housing loan application where you just sign off the things without understanding what you are entering into. So this how it affects, because valuation of asset and the cover is not maintained, then it can be either covered as a covenant or either it can be covered as a penalty. Okay, and both these will have a cost which will affect what you call as the cost of capital or interest. That's precisely when I said that this slide is the fulcrum or the heart of this entire presentation. I think at the end of the day, when you walk out of this session, if someone can really understand this slide to the extent possible, I think great justice would have been done to this discussion. Then securities. The securities, when you enter into securities, naturally as an institution which is extending you money, will like to cover itself, and automatically the question of mortgage or earning assignment or an insurance assignment will come into play. But what is more important to understand is how much that you are stretched to go in for some sort of a personal guarantee or a parent company guarantee or pledge of share. According to me, no doubt it depends on your negotiation skills or a sort of a discussion point, but definitely item number 3 and item number 4 should be avoided. Pledge of shares, it has got far-reaching implication. It's something which one should not go in for, because by virtue of pledge of shares at a given point of time, because with experience I can tell you, Indian banks, I don't know how to put it across, but the fact of the matter is still Indian banks are a little bit immature in a way in terms of understanding the shipping sort of a business. So they are very much relaxable with very many sort of aspects of what we are seeing in this slide. But foreign banks, to that extent, first and foremost, they understand this business very well. Yes, they do extend you a very concessional cost of capital or interest rate as we call, but at the same time, they are very, very clear about following the terms and conditions. And even a sort of a slippage of 1 percentage point here and there in terms of the condition, the implications will be immediate. And they are ruthless to that extent that they won't see. All those emotional and psychological factors are kept aside when they do the business. And they will go to the extent of even taking the control of the vessel. Whereas what we have seen with the experience over the years is Indian banks are not to that extent. So what is important is what you commit in the beginning. So if you are committed to something, better be knowledgeable of the fact what you are committing and be guided by that and take a sort of a proactive, which I am coming in the next slide, sort of a proactive steps to make sure that you are adhering by what you are committed. So say in terms of security, you should be able to avoid these things. Then what is the next aspect is with respect to the taxation. When I mean taxation, there are 2-3 aspects of taxation which is needs to be looked into, because at the end of the day, at any financial projection you would have considered a taxation aspect, how you will be exposed to the tax of the jurisdiction where you are going to operate the rig or operate the vessel. Also the fact that the taxation implication, as I just few minutes back narrated, at the time of acquisition of an asset. Acquisition of an asset and taxations are connected, because when you do a sort of analysis of acquiring a vessel and you are not considered a very important constituent, say a custom duty factor, it can really completely change the scheme of things. Today, for example, many people I have seen that are capturing the project cost in one shot in the realistic manner is being lacked by many even big organizations. Okay, they will do a fantastic Excel model, all sort of a permutation combinations would have been considered, but we will miss something which is very important and very glaring, and ultimately the entire project can go for a toss. So the simplest of the case is a custom duty factor. You have acquired a vessel outside India, you have signed off everything, you feel that, oh, this vessel is not anyway subject to custom duty, you bring in here, you are caught in the first port of entry, and you have to share the money for paying custom duty, which can be anywhere with the ad valorem and other things can go up to 10% of the value of the asset, and the financer at that time is not going to support, because you already have entered everything, a sort of an arrangement, and that again might have to be brought in by your own contribution, and you may not be having to that extent the money what we are talking about, because it's a very sizable amount. So when we talk about taxation has to be looked at from scratch. Scratch in the sense for the acquisition, what is the impact? For the interest part, I say it is again connected to the jurisdiction, as I just mentioned in the first of the example. Then the charter hire. The charter hire which will be earning out of the operation, how the tax is connected, because again the financial projections in the model are connected to the taxation, and your covenants are connected to the financial model. So all these have got interconnection among themselves, which ultimately decide your financial arrangement. So what I just mean by taxation is so critical in this entire scheme of things of deciding the critical conditions for financing arrangement. It is not this 3 or 4 aspects which I just narrated are important. You can have a separate session on taxation implication for a ship acquisition or something to that effect. It's such an exhaustive area of its own. Then currency implication. Again, this is something which again one can have a session of how long you want to, what the patient is one choice. But the fact of the matter is currency implication is so critical, because the project which you are entering ultimately the earning currency is going to be different than what your acquisition currency is all about. It can really make or break or kill the project. So what is important for you is to understand the implications of currency and an appropriate time. Make sure that you immune yourself. People have got a very wrong habit of going ahead and thinking of making money. Let me again put it for the benefit of the viewers that basically you are into a shipping operation. The objective with which you started this business is to make sure that you operate efficient sort of a shipping operation and make money out of that. So never ever venture into some sort of a speculative currency implication, because overnight, I can tell you, overnight it can kill your business. Rather, what you have to do is you have to immune yourself from that kind of a fluctuation. So that is what is very important. Then things like insurance. Insurance, again, you have got no sort of end to it. You can go and insure anything and everything under the sun. But what is important for you to make sure that there is a right mix of balance between what the money which you are going to spend on insurance and what you are protected for. Today, it is not. You can go in for even covering your charter earnings. Say, for example, all of a sudden you go and idle your vessel. There is a policy which is available today wherein you can cover that, but the cost will be a bomb. So whether it is really advisable for going in for that is a question mark. So again, with experience, with maturity, you will be able to strike the right mix. As I mentioned in the beginning, there is no sort of a set formula. It is not A plus B or equal to something like that, because these are all the parameters which are one has to be aware of. How it has to be utilized, how in each of the case it has to be put across is a very subjective one, and it will differ case to case. Next is the penalties. As I just mentioned, any of these parameters, if it is not being abided or if it is not going in the right direction, the financing documents will have penalties. And many times these kind of penalties in the first go, when you are entering into a sort of an arrangement, you will not come to know. It is unfortunately, it is on the occurrence of the event, okay, you get the shock of your life, okay, this is also I am subjected to for this penalty. So one has to be very careful in really going through. But yes, definitely the document will cover. The unfortunate part of the fact is many people try to ignore it on the fact that they are more concentrated on completing the acquisition, more concentrated on putting the things and making sure that the vessel is acquired, we are mobilizing it and stuff like that, rather than the concentration has to be making sure that all these parameters are also taken care of simultaneously. Then what we have is reps and warranties. This is again a very important thing. Any of these documents for financing arrangement will have a representation and warranties where what you are trying to say is what I am to do. And this fact, many times people misrepresent and land into trouble. And these are all very simple facts of life, or about the constitution authority of the company, or about the company, what it has been doing, what it is up to, and what are the other factors which is being guided by. And even on these simple facts and figures, many times people, it's not with again a wrong intention. It is not that the person who is signing off has got any wrong intention. It's more a question of sometimes understanding the real meaning out of these kind of clauses, which is more important. Then covenants. Covenants normally, in order to have some sort of in order to have a control or a discipline, what financiers do is they put a lot of covenants. Covenants can be in the fact in the way of financial covenants, like your net worth should be this much, your top line should be this much, you should have also have operating margin of this much, so that you don't in a way divert, or you don't go easy on your business. You are always up to it. You are making sure that it is being controlled. All those facts, or for that matter, you don't go crazy and start investing in something in businesses which are not even aligned or something to that effect. Or make sure that the overall control mechanism is in place. So what is more important here is the covenants which you are entering on day one. Again, it has to be realistic. There will be always, it's again a negotiation point. You are sitting against a financer who is lending you money. It's at the end of the day, it doesn't mean whatever the conditions which he is going to put, you are going to nod your head and accept. And if you are going to do that, and if you are going to unfortunately put yourself into a fix, as I just mentioned, it will have an effect on the cost. So be very, very careful. Make sure that that's why the importance of financial model becomes important. Because many times it is that, with experience I have seen, it is the financial covenants which becomes very critical. And as long as you got a financial model which is realistic, you can easily meet the covenant. If you try to be a little bit sort of a more aggressive or more optimistic, or for the sheer fact that you want to come out of that early stage of making sure that the financing is in place and go and accept certain of the things, it will backfire you on a later date. Then the condition precedent and condition subsequent. Normally these are all lot of statutory things which needs to be abided before you can really draw down the money from the financer. And again, this is a very, very important thing, because I have seen in my experience, because of condition precedent process not being met, the deal has been a showstopper, or it has come to an end. Despite the fact that it has, out of the scale of 10, you are somewhere in the stage 9. And the deal could not go through because you could not meet the condition precedent. So what is more important is when you normally enter into a sort of a shipbuilding arrangement, or for that matter, the selling and acquisition by way of an NSF sort of an arrangement, the concentration always is try to make sure that you clear all those agreement points, etc., etc. And many times the financial related, financing arrangement related condition precedents are left like that. So my sincere suggestion to the team is basically make sure that these kind of aspects, what you are entering, be knowledgeable of what you are doing and take it forward. Then we have got the other process, as I mentioned. In a financing arrangement, again, you will invariably look in, if you look into the things, there will be clauses like change to lenders. Okay, this change to lenders clause, as I said, many people will not even know what it is all about. But it is again something of huge significance. Today you are entering into an arrangement with an X as a lender who knows this business, who knows what the shipping cycle is, or what it is all about. You know about your credential. But normally what happens, there will be a change to lender clause in the agreement, wherein what happens, that X lender can transfer your loan to a Y lender at his whims and fancy. And if you go and accept that, no doubt you may ask a counter question, where what is the sort of a way in which I can avoid. And let me tell you, some cases it is difficult. It's again a negotiation point. It is not that at many times you may have to give it up. But what you can do parallelly is to protect that unless and until change to lender, yes, you cannot stop. But once the change to lender has happened and the new lender, for whatever, say that entire institution takes a call of exiting from the shipping exposure. This is exactly where I am coming from. Why I mentioned this point is many times X bank sells to Y banks, because all these foreign banks, you would have been seeing all the newspapers, Economic Times like this, daily someone acquiring some X acquiring Y, Y acquiring Z. This is all very common in international banking system. But once the new person comes into play, They may also take a policy decision of exiting certain sectors because they may be certain sector agnostic and stuff like that, and they feel there is no value for their money, and overnight the decision for that can be taken. So the unfortunate part is these are the kind of clauses which will be there in the financing agreement, but people find it very, very difficult to read between the lines to understand these things. So when you got such kind of a scenario, as I just mentioned, you cannot avoid a change to lender clause because the institution will not be even ready to part the money in the first instance. But how to overcome it is like when you have a change to lender, that is acceptable. The lender may also say that I am going to exit that industry, that also you don't have control. But what is more important, you take the time that if such scenario happens or such condition happens, I will be given 6 months time or 8 months time or a year's time or whatever, that depends on your negotiation power, and to that effect I will not be, so that you at least have the time to make sure that you replace in a very genuine way and you replace the entire financing in a most optimal way, rather than going and at the spur of the moment going for some mess finance or something like that and scratching your head. Then again, increase in cost. The increase in cost is again a factor which again many times you cannot avoid. But what is the trigger for the increase in cost? What really I mean by increase in cost is there are agreements wherein, like in housing loan, what you have got is the banks can go on changing, okay, depending on what is happening. You see in the newspaper, X bank has increased or lowered nowadays it is more towards lowering the interest rate. But unfortunately in the shipping industry it doesn't happen. You never see the bank lowering your interest rate from the time you are entered into. But what is more important is what sort of an increase in cost you are talking about, and whether there is a cure period for that. And if you feel that the increase in cost is not justified and you feel that you don't want to pay that, whether you have got a cure period by which you can exit and make sure that you are changing the lender in a more optimal way. Then prepayment and repayment. This is a very, very important thing. It again can change the entire complexion of your financing arrangement. When I said in the beginning, go for a time period or a tenure, okay, which is longish. That is, no doubt, is the underlying statement. I don't change that statement to even today, okay, or for that matter because of that. But what you have to do is you have to protect yourself by having a prepayment or a repayment clause which doesn't involve any penalty, okay. So that is what you have to have a sort of a cross check or a sort of a backup for each of your action. In each of these aspects, there is something which is hidden. So it is not that in its independence you can just go and analyze this. You have to link. That is what I mentioned even sometime back. All are linked to each other. So repayment and prepayment is again something which one has to be very cautious, and it has to be first allowed by the document what you are entering, and also make sure that you are not having any sort of an unwanted premium or a penalty associated with it. Then what is also important is sale of the asset. I think in my next slide I am going to talk about a sort of a proactive ways of mitigating or risk mitigation model, in which sale of asset is a very important thing. But in order to do the sale of asset as a risk mitigation model, in the financing arrangement, you have to make sure that it is present. It is present in the sense that many banks will not be against the sale. They will be far more, they will look into it, okay, if you are selling, sell it, if you are making profit, nothing like it, but share a part of the profit with us, which is what is going to really hit you at the end of the day. Because you have done all the hard work. I'm not disputing or denying the fact that the bank also has got a huge role to play. But why you are doing is because of a combination of factors. You are doing it as a risk mitigation because tomorrow for a minute, if I make a logical extension of the same argument, tomorrow you are not selling that asset and you are going into a sort of a time zone where things get more problematic. If the bank is going to support, the answer is no. So the logical question which comes out is why to have a pie in the sale of asset. So that is where you have to be cautious enough that you take complete know-how or cover of these kind of aspects and protect yourself in the agreement. Then the default conditions. It's an endless one. There can be so many conditions in the financing arrangement. Very specific, one has to be cautious if you ask me. Is something related to charter. Never enter into a sort of a default condition guiding the factor of charters, etc. Some people go and enter, okay, at any given point of time, I will make sure that I have a charter for this. I don't think so. In the sense that we are all matured enough to understand that at regular intervals, because of the nature of the business, there will be gaps. But having said so, at the spur of the moment again, certain conditions I have seen are just triggered because of the fact of enthusiasm of completing the transaction, which is what is very, very wrong. That is the entire emphasis which I want to bring over here in this slide, that don't be carried away by that spur of the moment. Be very, very cautious. This is the deal of any shipping, for that matter, even the simplest of the ship in today's market will be running into crores. So the implication, naturally, the consequent implication will also be running into crores because of that. So and these are the implications which can really make or break your business. So that is where I am coming from. So on this account, I think, despite the fact that I have covered at least say 75 to these many factors, this still is only 75 to 80%. But I have made an attempt to cover almost all the critical aspects of how a financing arrangement has to be looked in one slide, so that you get a complete grip of the transaction. Then once, sorry, I'm just okay. Just as I mentioned towards the end of the last slide about once you are done the financing, you had a great idea, you analyzed that, you had put everything in place, you explored the various ways and means of finance, you zeroed it in, you entered, you went ahead and almost identified the financing institution or the lender, and you had taken care of all the points what has been done. And you also gone ahead with the structure for a minute. What is also of paramount importance is, as I said, the finance arrangement goes for a number of years. It's not a one-day story or so, wherein you enter and then you can exit in the next couple of days, right? So basically, what in parallel you have to do is also to make sure that there is a proactive risk management strategies which are being looked into. This is very, 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 very critical, in the sense that people many times feel that, okay, I entered into an investment, I have now financing, charter is there, it is running for next 3-4 years, everything is in place. Yes, absolutely no problem, everything is in place. But what is after that 4th year? Is there going to be a lull? Is there going to be a scenario where the vessel is going to be without charter? Or how you are going to tackle such kind of circumstances or scenario? So what is more important is, instead of situation coming and hitting you, you better be prepared for the situation. That's precisely, I think any great financing arrangement or a model